In this week's episode of Investors Corner, we are joined by Tom, who's been a mortgage advisor for many, many years, and we're going to have a conversation around what's currently happening with mortgage rates. Are we seeing better rates out there due to inflation coming down? We're also going to have a conversation about, are we seeing more landlords enter the market because there's better buy-to-let rates out there with the large fees now decreasing? We will also discuss what the government should do to get the housing market back going again, and we'll give you our 2024 housing predictions. So make sure that you listen into this one, and as ever, make sure that you subscribe to the Investors Corner.
Hey, looking forward to this one. Tom, thank you for joining us. Long time in the game, as Andy said on the intro. So let's get stuck into some buy-to-let mortgage information, which we actually haven't covered on the podcast in a while. So
no, we haven't. I think the last time we covered it was probably a couple of months ago.
Yeah,
so it'd be good
bit of an education for us.
Yeah.
A lot's changed in that time. So
what I keep seeing, which is quite interesting, is buy-to-let rates seem cheaper than residential rates, and that's been the case for maybe the last 12 or 18 months. But of 21 years in property, typically speaking, that wasn't the case. Mm-hmm. Why do you think that is at the moment?
I'm not too sure, really. I think, first of all, thanks for having me on, guys. I think it's an interesting one with the buy-to-lets at the moment because there has been, for most of 2023 and arguably 2022, a bit of just a slowdown in the market in general. And I think the banks have had to just react to that slightly and just they have to get a bit more competitive.
I think they want to do business.
They need to do business. Yeah. This is their business model. If they're not lending money, then they're not going to be in business much longer. So I think they're just having to get a bit more competitive, in general, really. But they've been sort of equal to, I'd say, with residential for quite a while. But there has been times where it's been actually better than residential. It's the first time I've ever seen that.
Yeah.
At the moment, they are very slightly higher than residential, but it's still as close as it's ever been. Whereas in the past, it's sort of been at least 0.5% higher with
whopping fees though.
Yeah, whopping fees,
which we're seeing a change on now. Yeah. So there were big fees, like you said, but because the lenders are competing with each other and they need those people on their books, really, it's right. Okay, let's drop the fees down from. I remember it used to be 5% fee, wasn't it?
There was a 7%
fee. Now
like
I've seen I've seen recent ones 3% fee or even lower. So it's obviously going in the right direction because they need to do it.
It's definitely going in the right direction, and the fees. Yeah, I think that was a real kind of reason for people just holding fire was the fees. They could see the rate. They'd be like, okay, I can accept that, but I can't swallow a 3% fee on a 200 grand mortgage or whatever. It's just such a high outlay. But that's definitely come down. We're seeing some really competitive rates now with no fee. Again, as mortgage brokers, we'll always do the calculation as to what's worth paying and what's not. We legally have to recommend the cheapest option and justify what we're recommending. But there's I was looking this morning, there's some pretty good rates out there with no fee. You can now get sort of around 5.2% with a £2,000 fee, which having a fixed fee, I think a lot of landlords and future landlords just prefer the idea of that rather than when they see it as a percentage of the loan. It's just like it's just too much to sort of swallow sometimes.
It's like anything, if you've got something put in front of you and you're paying out your hard-earned cash, it's right. I want to see the figure. I don't want to see a percentage because then that means I've got to try and work it out, or I've got to rely on someone to work it out for me. I can't be asked to do that. Just give me the flat fee and what I'm going to pay. Happy days.
Yeah, it becomes much easier. I think around here as well, we're lucky in this area because the fixed fee of £2,000, or I saw a couple at 3,999. That's actually not too bad around here. Because of the type of loan they're probably going to get, the size of it, because the average house price in sort of more the home counties and going into London as well, that works all right. Yeah. Not as beneficial up north.
In the Midlands, but I mean, some of the rates do look sort of astronomically high, but when again you do the maths and you realise that it's actually worth going for that higher rate with no fee, it actually does work itself out. And sometimes it is just better to go for that higher rate and just save yourself £2,000 or 3% or whatever we've seen. So it's just getting a good mortgage broker to do the calculations for you and then going from there, really.
How's the trend been over the since COVID? It'd be interesting to know since COVID. What's the trend look like for buy-to-lets? Have you seen it kind of when obviously everything went bonkers with stamp duty and It's normally a sort of annual average is about 1.2 million transactions in the UK. We saw over 1.5 in that year. So just generally speaking, transactions are up. Were buy-to-lets up at that time as well, or not? How have they looked over the last sort of 3 years? Have they just been steady, or has there been a change?
Probably COVID was huge with the stamp duty holiday. I mean, that was COVID went from being my quietest year, sort of, we were sat sort of doing nothing for a few months, and then at the end of that year, sort of the last 6 months, 2020, it was the busiest year probably I've ever had, or certainly since I've been self-employed, which is 6 years now. So I'd say 2020 and 2021 were really busy for buy-to-let, and I definitely saw more transactions with that. I've definitely, I won't lie, I've seen it has got quieter probably since Liz Truss's car crash budget in 2022. So I mean, if you look at 2023 and sort of, what was it, September, I think that was, at 2022 when that all happened, it's definitely got quieter as a result, because it felt like a lot of just general turbulence in the market. Rates started just going through the roof, and I think that just sort of put the frighteners on a lot of people for a while, and especially sort of buy-to-let investors maybe just thought, let's just hold fire for a bit. But I do really feel now that it's kind of coming full circle. I think the Bank of England base rate stabilising was absolutely huge last month.
Inflation coming down as well to a more reasonable figure is probably helpful for confidence.
And it just feels like it's brought a lot of calm to the market, and sort of almost given like the lenders and investors and people looking to move home just sort of a pause for thought and just a bit of calm. Just think, right, actually, let's take stock now and just see where we're at. And I think it's just lenders now. We'll talk about 2024, I'm sure, but I think with the swap rates that have come down quite a bit recently, or in the last few weeks, that is now giving the lenders a lot more sort of wiggle room to offer some better interest rates, which they've not been able to do for the last year. Their hands have been tied with that. Whereas now, I think they have now got a lot more room for manoeuvre, offering better rates. And I think I've already seen it in the last few weeks, to be honest with you, a lot more inquiries coming in, a lot of people who were maybe just sort of waiting and seeing what's going to happen, and now like, okay, let's do it. So I'm really positive about 2024. I think it's going to be a really good year.
Yeah, I think with clients that I've recently spoke to about buy-to-lets, where a few months ago they were contemplating on selling their buy-to-lets because financially it didn't work out for them, but now it's because the rental prices have shot up. Around this area, we're looking at, well, I've had a 2-bedroom apartment, $1,650 a month that's just rented out. So now landlords are looking at that and saying, right, okay, I'm due to remortgage now. I'm going to fix a tenancy for 2 years at $1,650 a month, or, build a rent increase even after that, after 12 months, and then remortgage for another 2-year fix. Financially, it works out.
Yeah.
And they get a bit of money in their pocket as well.
And it helps us as mortgage brokers when the rent is going up as well, because that just frees up a bit of affordability as well. Whereas, again, we've had our hands tied with that, with sort of stress testing and that sort of thing, which is, lenders have got a little bit nervy with that. But again, I'm seeing that going in the right direction as well, which is definitely helping us out.
Yeah.
What is going on with the kind of stress testing these days with the lenders? What are they what's their expectations on things at the moment?
Well, a lot of them, I mean, it used to be sort of, if you've got a 25% deposit and it's 125% of the interest only amount in happy days, those days are gone, unfortunately. But the stress testing has got a bit better. There are some banks using a bit more of a common sense approach to it, I'd say, trying to get closer to the pay rate, which is the fixed rate, rather than say sort of sticking 2.5% on top of the fixed interest rate. I think that is going to come down a little bit, again, just from what we said earlier. I think the banks need to start sort of just reducing their stress testing just because they need to lend. I was at HSBC last week at their head office in Canary Wharf, which was really nice, and they did a really interesting presentation on just net lending in the UK. And 2023 has been the lowest net lending. I think it was in like 20 years. It was just as bad as 2008, 2009, which I thought was staggering. I thought it wouldn't be quite as bad as that. So they need to make up that deficit in 2024. So I think they will kind of reduce their sort of stress testing demands a little bit, just to make up some market share again, because they're going to have to make up, the lending that they kind of lost into next year, I think.
It looks like this year, statistically, on transactions, we'll see way over 20%, maybe 22, 23% down on average transactions just across the board: cash, mortgage, buy-to-let, resi, whatever. And that must hurt the banks. You know, that must hurt them, because the bulk of that in the UK is going to be mortgage related, which means it's good news for us, because it means they're going to be doing their end of year financials, looking at it thinking, right, we've got to get off to a good start in Q1 next year, which I'm looking forward to hopefully seeing those rates. But we do a live call every Thursday. In fact, we did our last one this week, and 2 weeks ago we kind of looked at the best deals out there, and they were kind of residential. This is 5-year, even 60% loan to value. They were kind of like high fours, like mid fours, something like 4.75, 4.8. And now I believe there's a resi deal that you can get, can't remember who it was with, but under 4.5. So just for 2.5 weeks to see a 0.25% change on a resi deal, that gives us a lot of confidence going into next year. And I think, like you said, with buyers, we're seeing a lot more viewing activity. If the property's priced right, it does still sell in a week. That's the beauty of it. And that wasn't the case 9 months ago, but it does now. So that does show that there is the demand out there, which is good. That's interesting what you say with HSBC. What's your kind of expectations for the first half of next year in the buy-to-let mortgage world? What's your mystic Meg? We won't hold you to this. This is not advice. Don't hold Tom to this. But we're just guessing and opinion-led here, really.
I think in Q1 of 2024, we're going to see almost like a bit of an interest rate war between the lenders for what we said, really to take back some market share, which is obviously great for borrowers and great for the market in general. I'm anticipating personally sort of my business to be a lot busier in the first 6 months of 2024 than I was probably of this year, just transactionally anyway. I mean, what I noticed this year is, even though we did do less mortgages this year than we have done in the past, for obvious reasons, but I never saw the amount of inquiries coming in drop, which was always positive. It was people still wanting to buy, landlords still wanting to either increase their portfolio or people wanting to become a landlord. But just the numbers didn't quite stack up, whereas I think we're going to see that completely change now coming up in Q1. So I think we're going to see some, I think interest rates sort of beginning with a 4 will become the norm. Maybe even sort of high 3s if you've got a really low loan to value, maybe a high setup cost. But I think that is kind of where we're going to be looking at, sort of the 4% sort of figures. That's my sort of estimation anyway. I think earlier this year we were looking at sort of like 6.5%. So, I think it feels like we have got really through the worst, which is really good news.
Are you finding that with investors that you're chatting to? Is the demand increased, or is the kind of the lukewarm conversation started yet? Are you speaking to newer investors, seasoned? What sort of
definitely the lukewarm conversations are coming through. Probably 6 months ago, they didn't even want to entertain the conversations. If we had an amazing property on the market that could work out as a buy to let, they just weren't interested. They didn't want to put their money out there because they didn't know what was going on, and the interest rates were quite high. Now that's sort of flipped right now, because the clients that I was speaking to then, they're now talking to me saying, right, I'm at the end of the year, I'm looking at my next year goals. I want to add 2 properties to my portfolio, or I want to add 1 property or something like that. What have you got? So those conversations now coming through from multiple people just shows that it is on the flip side, and going into Q1 next year, I think there's going to be more of those conversations being had. I think with rental prices, we're going to continue to see those increase, because the supply is still not there. It's not going to happen overnight. And I think more and more people will look at that and think, right, my goal is to keep hold of this investment property that I've got, because over the next 3 to 5 years or whatever it is, my goal is X, to take out this much equity of the property or something like that. And they'll continue to rent, and you'll get more queries coming through about buy to lets. That's my sort of prediction on it. And that's just from the conversations that I'm having now compared to 6 months ago.
And like I said, my sort of prediction is, and what I'm already seeing is just a lot of inquiries I had last year where it just didn't quite work. We couldn't quite make the numbers stack up. I think people will now make the jump now and go for it. And I get a lot of clients who I've long-standing clients might not have done like quite a lot of residential mortgages for. A lot of them have aspirations to become landlords one day. They know it's a good investment, so they quite often ask me like, how much do I need to have in the bank to get a decent deposit and all that sort of thing. those conversations I get quite a lot. So I think there's always going to be that kind of aspiration to become a landlord, and landlords to increase their portfolio, because you said that the demand still with tenants is really high and there's not enough supply. So I think people want to get a bit of that, really.
Their ultimate goal was to increase the first time buyer market, wasn't it? That was what they wanted to do.
Mm-hmm.
So to do that, what they've actually done is they penalised the buy to let market by trying to make the first time buyers get the jump. And in theory, it's worked, because there are more. That is the dominant buyer in 2023 is a first time buyer. I think it accounts to 29% of all transactions of first time buyers at the moment, something like that, 30% odd. But what it's in a sort of weird roundabout way has done, because landlords have exited, because less buy-to-lets have been purchased, it's meant that rental demand, because of the shortage of rentals available, has become out of control. And if you are a first-time buyer in rented, you're not saving a deposit.
No,
you're just trying to pay your rent. Because it's gone,
and just hoping it's not going up, too much as well.
And that's sort of in a roundabout way impacted things. But it would be interesting to see, because there was a lot of talk this week, maybe some sort of stamp duty incentive in the budget didn't happen. Maybe it comes in the next one or the following, we don't know, or not at all. But I think there's too many murmurs of something being spoken about for it to not happen.
And I think, sorry to interrupt you, and I think it's going to be really interesting with an election next year as well, just to see, there's an argument, it depends where you stand politically. Are the Tories sort of on borrowed time? But I think I wouldn't be too surprised to see some kind of incentive just to get some almost brownie points for their last one last swing at it before an election, and to see if they bring out any policies that they want to sort of stimulate the economy sort of last minute before that.
I mean, the government now are pretty sort of one-trick ponies with housing initiatives. It's got to be said, because whatever they talk about, it doesn't work, or whatever we want to implement that will make it better for people, they don't. So, I don't know what they're going to do, but it's probably not going to work, whatever they do.
No.
Yeah. I mean, the stamp duty thing, you could say that it wasn't actually required, because of furlough put so much money in the economy and the pent up demand of coming out of lockdown. The market was actually like rocking and rolling 3 months before the stamp duty holiday came in. It was like, wow, we've just opened the doors to the floodgates here. And then they threw that on the fire as well. It was like throwing petrol on a fire. It was mental, but it did work. It obviously got the economy going. It got transactions happening. What would be interesting is, what version of it do they do? Do they do another holiday, or do they do something else? What they should do is exactly what, I can't remember who mentioned it. I think it might have been Ricky said it on the live chat. And can they do something to incentivize downsizing?
But that's what they need to do. They need to target who they're helping, instead of going, here you go, here's stamp duty holiday for everyone. Because the people that don't actually need to move are going to take the houses that they wouldn't have taken, which is going to obviously take them off the market for the people that do need to move.
What we desperately need at the moment is the people that are in the big 4-bed detached houses that have been in there for 20, 25, 35 years, that have got no kids living there anymore. And all due respect to them, like they've built their wealth through their house, and they probably mortgage free, or they've got a very small mortgage, but they're not moving, because if they move, it's a hindrance, it's a costly exercise. They're potentially retired now and not working. They don't want to go and spend money on stamp duty tax and agency fees and legal fees and removal fees. If they could incentivize them to do it, I don't know how they would do it. It's a stamp duty on a downsize incentive, or an over 70-year-old incentive for stamp duty. What that does is it frees up all of those houses that all of the families want in the villages outside of towns, and the whole market kicks off. The whole market gets moving by freeing up the top. What they try and do is they fuel the bottom, and then you get to this cluster point where all the small 3-beds, small 4-beds want the big, and they're not there. There's just none available.
In the middle, it's not moving.
And it just causes a massive backlog of an open chain. You don't get paid as a mortgage advisor. The first-time buyer keeps chopping and changing at the bottom because nothing's ever happening. It doesn't result in anything. And the other element of things that would be very interested, could they bring something in for let-to-buy purchasing? Because if people have got a load of equity, because we've seen prices climb 25% in the last 3 years, and they want to keep hold of their property, they want to become a landlord, and they could do a let-to-buy where they let their small 3-bed, 2-bed, whatever it may be, out to buy another property. It probably means they don't jump from a 2-bed flat to a that's worth 300 grand to a 725 property, like we saw happening 2 years ago. It was mental. The jumps people were doing was unbelievable. It probably doesn't do that, but what it does do is it just gets things going, and it gives the rental market a bit of release if there's a load of let to buys going on.
This came up at HSBC weirdly, and they sort of were saying, it was their sort of head of sales there saying he'd actually like to see almost like a stamp duty holiday on, for want of a better word, last time buyers. Like, but it's so hard to police. It's like, how do you know if it's going to be your last house or not? But yeah, if it is someone, if over 70s downsizing, it's a lot of people. My grandparents, for example, I don't think they'd think about doing that right now because they're mortgage free in a nice house. Why would they want to spend tens of thousands potentially on stamp duty with the hindrance of of moving on top of that? So I think that could be really good. But going back to the let to buy thing, I think that could be crucial to get them to get the investor market going, to get the market going in general. I mean, when I first went whole of market, which was 2015, I think, let to buy was just, we used to do it all the time, and it'd be, and I mean, for us as mortgage brokers, it's great because it's two transactions. We're getting paid on the let to buy and the purchase. It got the market moving a lot better, and it just that's probably the number one sort of objection I get with people looking to do let to buy. Is like, I'd love to do it, but stamp duty is just going to kill us. So I mean, if they were to do something along those lines, I think that would help. Whether they'll do that or not, I don't know.
Why do you think they haven't done that yet?
Because
what you're
incentivizing for investors.
Yeah, so what you're talking about makes complete sense on how to get everything going. Why do you think they've even thought about?
I think they are worried about being a negative onslaught for making landlords, because it's the reputation of a classic stereotypical landlord is not a good one in the UK.
It's greedy, it's I want more.
Exactly.
And it's, if you're taking that away from people who, I'm just trying to get a house, not letting them my second one, I think politically that is difficult to sell.
If you own a 2-bed house or a 2-bed flat, there's an argument that 2-bed house is a first time buyer property. I totally get that. But it's also a property for a tenant, and tenants are becoming homeless because they can't find anything.
Yeah.
So you've got to look at both elements of things. People need property to live in. And I think if they did do that, they freed that up. There's enough first-time buyer type properties for people to go and buy, whether it's new build, whether it's the apartment market. I mean, there's apartments everywhere at the moment. So if you owned an apartment and you're doing a let to buy, the logic is, well, just let them do it. Yeah. But I don't know whether the stamp duty holiday would need to be on the 3%, because obviously you're buying a second property, and then it becomes, can I do it on the stress test? Can I do it on the purchase? Do I have enough equity between the one I'm leaving to the one I'm buying? You'd have to have a lot of cash to do it. So take that 3% additional out of the equation. You may have just given them an extra 12, 15, 16 grand. Yeah. It's then doable.
And if the net result is good to sort of make, because there is more transactions happening, then everyone wins as far as I'm concerned. But going back to what you said earlier with the stamp duty holiday in 2020, I don't actually think that was needed. I had so many people, my parents, they were moving home, and during that period they announced it, and they were just like, we just saved 10 grand overnight. We were going to be moving anyway. Yeah. And I had that with so many clients. I just thought it was a bonus. Well, we wanted to move. Like
I did it. I didn't need to move.
Yeah.
But I thought
we just spent it on some
might as well
instead.
Yeah. Loads of people.
Why not?
Yeah, exactly.
To save myself 12 and a half, 15 grand or whatever it was.
Anyway,
come on, then I'll do it.
I didn't see many people actually go, oh, right, that's actually an impetus for us to now move because of stamp duty. It's like, well, we're going to be moving anyway. So everyone just saw it as like, I can just spend it on something else.
What it did do is it pushed a load of people to move where maybe some of them would have, but some of them wouldn't. And when we looked kind of 12 months ago, and we were forecasting this way before, maybe 2 years ago, what we knew is we were going to have 2 years of lower transactions because a lot of people had shifted forward. And just from a business point of view, we were strategizing 18 months ago saying, well, next year, as in 2023, is going to be low transactions. So for estate agents, for mortgage advisors, we will, to do the same turnover number, we're going to have to do a lot more work, a lot more work in it. And you're seeing a lot of people struggle in the property industry because of the transactions are down. No one will start playing the violin for the banks. But what we will see for the banks is some sort of onslaught, some sort of redemption sort of attack on their figures for next year.
They're going to have to.
That's going to benefit the public. That's great.
Yeah, definitely.
What I am interested to know, though, is the types of landlords as well that we think might be knocking around in 2024. It'd be great to see the let to buys back. We saw the small businesses kick in, didn't we? We saw small business owners, medium-sized business owners looking to acquire property because they'd made a lot of money over those 2 kind of windfall years. Who else what's the demographic look like for the landlord?
From the conversations that I'm having, sort of the landlords that will come through are current landlords with 1 or 2 properties looking to purchase another one. That's from multiple conversations that I've had. You've also got current landlords looking to incorporate their buy-to-lets into a business, which obviously has tax. Well, it's for tax purposes, which will free up sort of more of an outlay of cash that they can reinvest in other property as well. And you've got your first time landlords, accidental landlords, where they're either moving overseas or they're with a partner that's already got a property and they're going to move in with a partner and rent out their property. So it's really a mixed of landlords that we're going to see come through. But I think your main landlords be the ones that have the 1 or 2 properties looking to add to them. I've spoken to landlords recently that have had 10, 12 properties in their portfolio. They're not looking to do anything for the next year because they're quite happy with 10 or 12. They've reinvested some of their money or their equity into other investment areas. So they're quite happy with their 10 or 12. And I think most portfolio landlords might be like that for the next 12 months, just to see what does happen next year with the interest rates coming down, the base rate, etc., etc. So, your landlords 1 or 2, I think we'll see a lot of them enter to find another property.
Yeah, I'm getting a lot more inquiries. People looking to go down the limited company route as well.
Yeah.
Certainly in the last 12 months, I've seen that, and there's more and more lenders that are coming to the limited company market as well. As obviously, I'm not a tax advisor, but there are sort of tax advantages to doing it. And I think it's become a more competitive space in the mortgage market for limited company.
If you are a landlord and you're thinking about going down the limited company route to incorporate, just make sure you seek that professional advice. Some people that I've spoken to think it's something quite easy to do, but you have to meet certain requirements in order to do it. You can't just do it tomorrow. So just make sure that you get that professional advice from
the other advisor. Kind of trend that's coming over the next couple of years as well is there will be more people turning 65 than 21 for the first time on record ever, which shows that there's a marketplace for the 60. Well, there's going to be a dominance of 65-year-olds in the UK, whether you're talking from a restaurant perspective, from hospitality, products, services, mortgages, or property. That in itself, recruitment as well, that in itself is going to be very interesting because it does mean, will banks start to look at that element of it? Because it's always been a bit tougher, hasn't it? That age bracket's been tougher for getting lending.
The landlords and investors that I've been speaking to sort of range from 50 to 60, 65. That seems to be the core of the people that I'm speaking to at the moment.
Is that people trying to sort of increase their pension because they realise maybe they haven't quite paid enough into it?
Yeah, I think they're well, especially at 65, and they're looking to retire. They might have a couple of years before they do that. So really now they're trying to maximise everything they can. And for young investors, which I don't really get a lot that I speak to, or with landlords that want to rent their property out, there's not a lot of young investors out there, either because they haven't got the knowledge to do it, or they don't seek that advice to go and get the knowledge on how to do it and how it can be a great investment opportunity. But I think a lot of the young investors want to put their money somewhere else. Yeah. So we're talking crypto, shares and stocks.
Sort of very
things like that they're thinking, actually, I might be able to 10x this tomorrow. And they're like, I'm going to put my money in there. But we've seen before, you could lose a lot of cash. You can lose a lot of cash overnight from doing that. It's happened to me in the crypto world. I'm a lot more
I won't come to you for advice.
No, I'm a lot more hesitant now, and I look into it a lot more than I used to. I used to just hear the headlines and go bang, and then I'll be like, I haven't made any money on that. Why haven't I done that? Yeah, because I didn't read what the community was like on that crypto. So but I think, you know, from the buzz that you see on social media, the trends that you see on social media, it is stocks, shares, crypto, NFTs, whatever else is going on.
Yeah.
It's just all about that.
I think for younger people, it can be almost like an opportunity to look very clever. You know, look what I've done on, you know, on sort of crypto or Bitcoin or whatever. Whereas the sort of, you know, the 65 sort of age bracket, they are sort of probably a bit more, let's go with bricks and mortar. And
don't get me wrong, there's
methods.
There's some successful young people out there. I know people that have made millions of pounds at the age of 20 by investing in crypto, and fair play to them. But
a lot of these people that have done that level of things have given it 10 hours a day. It's become their discipline. It's become their skill. Typically what we're talking about in the buy-to-let space is not professional full-time buy-to-let landlords. We're talking about people that have got a full-time job, or maybe they've dropped down to 4 days a week or something like that. But that age of the bracket, they've got a lot of generational wealth. They've got a lot of equity from being a property owner for the last 30 odd years. And that means that they can do things. And it goes back to that stamp duty thing again. You know, if you're talking about those 800 grand houses, and in those 800 grand houses, all of a sudden they're downsizing because they're thinking of later life. They want a ground floor apartment, or they want a smaller property that's easier to manage, smaller garden, closer to town centre so they can walk to shops. They might downsize to 450, pull a pension fund out, or pull a little bit of a pension win, call it 200 grand, 150 grand. All of a sudden, they look at it and they think, well, yeah, I've got 2 grandkids, I've got 2 kids. I could buy 2 1-bed flats, or 2 2-bed apartments, or 2 2-bed houses, live on the rent, 3-4 grand a month's worth of rental income coming in there as well. And that would allow me to retire early. So when you look at the whole sort of spectrum of what could happen by just incentivizing, and the truth is they don't need the stamp duty holiday to do that. They can do it anyway. The 10 grand makes no difference, but it feels like I've got 10 grand off the tax man. So you feel
exactly, and you're going to take it, aren't you? But
that's the buzz, isn't it? That's what it is.
I think from a mortgage perspective there as well is, if you're 65, your hands are quite tied residentially, because all the lenders are always looking at, like, what's your income going to look like in 5-10 years. You told us you're going to retire in 5 years, so they're going to work out the affordability on your pension income, which might not be as high as your current salary. Whereas with the buy-to-let market, they're actually really quite flexible at that age. To sort of, they'll let there is a couple of lenders that actually don't have any age limit. If you apply before 70 or 75, I can't remember the number now, that you can basically have it until you're 100 or whatever. They know that the applicants are doing that to boost their pension income. So that sort of age gap, sort of around sort of 65 to 70, is actually it's actually quite an easy time to get a buy-to-let mortgage, because as long as you're sort of below a certain age, that they'll kind of they're not actually too bothered in terms of when this mortgage is actually redeemed, because they know it's an investment. Whereas if it's residential, like, well, this mortgage has got to be done by your time 70, 75. So that's I think, just hearing what you said about more people being 65, that's a huge opportunity, I think, in the investment world.
The banks aren't scared of property investment, because they know it works. They know long term they're going to get their money back, and typically speaking, that's the way it goes. So that's interesting to hear that, because the other part of it is we're living longer. People are not dying as early as they were before. We are living longer. We live a healthier society. Medical healthcare is better. We're more aware of what's good and bad, and as a result, people are living longer. So at 65, you've got a hell of a long time left. Touch wood for you. You've got a long time left, and you can do a lot in that next 30 years. And that's an opportunity to build your life over that 30-year window, to make sure that your loved ones benefit from it. You live the life you want. You can enjoy yourself, and property movement around that 30-year window, or at least over that next 10 years to set it up for the last 20 years of potential life. That's a real key strategy that you can take advantage of, and people want to, I think. So it'd be interesting. What other thoughts have you got on the buy-to-let market that maybe we haven't covered so far?
I just think that is going to get a lot more positive next year. I would, you can probably tell what I'm going to say. I'd always just say, just speak to a mortgage broker and get them to look at your your whole sort of picture in terms of, you might be a landlord who's just, coming up for renewal for a 2-year fix, and you've just done it yourself each time. Go and speak to mortgage brokers. They might be able to look at things from a different sort of angle. You might get, if you're struggling on affordability, for example, you might have a lender who will look at the market value of the rent rather than what you're actually charging right now, because we do get that. I've got a really good tenant, I don't want to lose them, but I know I could be charging more. Some banks will just be like, well, that's what we're going to base our stress testing on.
Yeah.
Some will say, actually, we'll send one of our valuers round and see what we think is worth and do an affordability assessment on that. And there's things you can do like top slicing and that sort of thing, which a mortgage broker can talk you through. More and more lenders are doing that, where they'll look at your personal income. If you've got a tenancy which is a little bit tight on the buy-to-let affordability, but you've got a pretty good salary and not many other outgoings, lenders will look at that and think, okay, you've actually got a bit more disposable income each month. We can look at that to increase your lending as well. So I would just say to speak to a mortgage broker and just get them to look at everything. And you never know, you might actually be able to sort of increase your options.
We say a lot, it's all about individual goals, isn't it? What is the purpose of that buy-to-let, of that investment property? What are you trying to achieve from it? And based on knowing the end goal, it makes the next move for you as the broker, for us as the agents, if we're advising, a hell of a lot easier as well. So interesting to see what happens in the buy-to-let space over the rest of the year and then going into next year. Thanks for coming on.
Oh, thanks for having me.
Thanks for sharing your expertise. I'm sure we will have you on the podcast next year again. See if you were right.
Otherwise, yeah.
We'll play this
myself.
So, Tom,
that's
you
what you
said
this.
I did this off the back of that. Yeah. No, of course, it's all kind of forecasted and opinion led, but that's why we do these podcasts, so that people can hear what the experts are saying. So thanks for coming on.
Thanks for having me.
Thank you.
Why have we made the Investors Corner podcast, Ian?
I think online at the moment there is just way too much noise, waffle and nonsense. Everyone's got an agenda. So the goal was to make a podcast for people that want to invest money in property or other areas where there's no waffle, there's no nonsense, there's no agenda. It's opinion led, but it's an honest opinion. And it might not be the right answer, but we're going to share it.
So on the podcast, we're going to supply people with access to mortgage brokers, financial advisors, planning experts, development consultants, everything around the property industry and the wider fields.
Yeah, so if you're looking at investing in the future, you know that just having an income from your employer or from your business is not enough to give you the life that you want down the line. We're going to hopefully give you some of those answers that will give you the solutions you need for the future.
So please hit the subscribe button. The more subscribers we get, better guests that we can get on, and the more people that we can reach. So hit subscribe.